Hey guys, what's going on? Jeb here, and in today's video we're going to be doing a follow-up to yesterday's video where we discussed the worst case scenario on Bitcoin and how Bitcoin could potentially fall all the way down to the 200 weekly moving average down here around $4,500. And in today's video, instead of talking about the worst case scenario, we're going to talk about the best case scenario and how Bitcoin might actually get support where it currently finds itself and continue a rally pushing higher. I want to show you the bullish technicals, what little there are, and how Bitcoin might actually manage to stage a bounce from around $7,750 to $8,000 and continue higher from here. Now guys, I want to get it out of the way first and foremost in this video. I'm still leaning more to the bearish side of the arguments that we're making here. This is simply a scenario that may play out. This is simply the bullish side of the technicals. Just because what I present here today does not necessarily reflect my opinion, I want to state at the outset that I'm still feeling pretty bearish on Bitcoin, but tomorrow we'll talk about my opinion on that. So guys, I think we've got a great video lined up for you. If you guys do enjoy today's video, make sure you smash that like button. It really does help out the video in the YouTube algorithm. And if you enjoy the content here on the channel, consider subscribing. One more thing I want to mention, guys, is that this video is sponsored by the Cryptocurrency Technical Analysis Academy. It is because of the Academy here and the 900 plus students that are in the Academy learning about technical analysis that we are able to make these free daily videos here on YouTube. So if you want to see these videos continuing to happen, it's really a great idea to help support us by joining CT2A while also learning about technical analysis, which you need to know if you're going to be in this space. Links are in the description down below. More on that at the end of the video. Obligatory sip of coffee out of the way and the introduction too. Guys, let's go ahead and dive right on into it. I want to look over here on Coinbase's chart and look at the short-term technicals to start with. As you guys can see, Bitcoin was being wedged in between the 200 hourly simple moving average and the 100 hourly simple moving average in yesterday's video. I noticed this during the recording of yesterday's video, but since it was off topic, we didn't talk about it. And I was expecting for a breakout to come here because these two moving averages actually formed a bit of a pennant. And Bitcoin did break bullish out of them, but currently at the time of recording this video, Bitcoin's actually breaking bearish out of them. And that's not really a good sign, guys, because we've been wanting Bitcoin to bounce here. We've been wanting Bitcoin to confirm and establish and maintain this double bottom it has down here for Bitcoin going bullish. Hence, one of the reasons I'm not feeling great on Bitcoin is that every time it tries to stage a rally, it doesn't really work. But nevertheless, I do want to do justice to the bullish scenario here, so let's go ahead and dive into that. The first thing I'd like to mention, guys, are our two oscillators down at the bottom of the chart, both the MACD and the RSI on the daily chart. As you guys can see, the MACD is converging bullish on itself and has been for the last 5 to 6 days or so, ever since we actually fell below the 200 daily simple moving average. We've been below that, and Bitcoin's MACD has been converging on itself because when MACD gets very far away from the zero level, it has a tendency to be pulled back towards it. And if you're below the zero level, more often than not, our MACD line down here is going to be lower than our signal line, which means that a bullish cross can start. So as you can see, we went bearish and we're now converging bullish on ourselves. And the bulls in the space right now would say that Bitcoin looks like it's going to have a bullish cross, at least in the next couple of days. If you add that to the RSI, because as we can see here, guys, the RSI has only gone this overbought just a couple of times in the last several years on Bitcoin's price action. The last time we saw Bitcoin pull this far back was back over here at the bottom of the entire bear market when Bitcoin pulled back to $3,000. Bitcoin bounced from there and rallied 350%, guys. So the last time we saw Bitcoin go this overextended, this bearish on the daily RSI, it led to a major rally. And in fact, if we look even farther back in history, we see similar things happening when Bitcoin went overextended on the RSI here and went on a big rally. Same thing right here. Bitcoin continued its accumulation phase. Typically when RSI goes below 30, not only to 30, but below 30 on the daily chart, it normally indicates that you're about to see some kind of major bounce. So those two things do look relatively bullish on Bitcoin. But what else? Well, let's look at some chart formations, because I know a lot of people have been talking about this falling wedge here over the last several weeks. Actually, this isn't really new, but it is something I haven't touched on much on the channel, and I haven't touched on it much for a reason. We can go ahead and draw a falling wedge right here, and to be honest, these do normally break bullish. Normally when Bitcoin is rallying as it did and trades downwards as it is here, it will normally break bullish. This is a pretty textbook pattern. If you guys are in the Cryptocurrency Technical Analysis Academy, down here in wedges and pennants and continuation patterns, you're going to learn all about this pattern, and these do typically break bullish. That all being said, guys, we saw that Bitcoin was in a consolidation pattern like this. It was a symmetrical triangle pattern. I still disagree that it was a descending triangle pattern, and that really should have broken bullish also, but it didn't. So guys, keep in mind that just because we're seeing this kind of falling wedge here, that doesn't necessarily mean we're going to break bullish, but oftentimes it does. And it isn't something that you just want to ignore. You want to make sure you're taking all of the technical analysis into account. Furthermore, guys, one thing that the bulls are going to say in this situation is that Bitcoin fell below the 200 daily simple moving average. We've been down below it for over a week now. And guess what, guys? Bitcoin has not actually capitulated because of it. That's pretty major, and I will hand that to the bulls. That's a very good argument. Bitcoin fell below the 200 daily simple moving average, which is something that pretty much never happens during a bull market, and we didn't fall. We didn't capitulate. We just kind of traded right below it, which means that there's a big zone of support just below this as well that we've talked about, starting at around $7,750. But it also means that the bears have not been strong enough to crash Bitcoin. And oftentimes, if you're in CT2A and you've gone through the video bull and bear markets and also gauging the strength of the bulls and the bears right here, if you've looked at both those videos, then you can tell that that's one of the ways you determine which faction is stronger, the bulls or the bears, which one is in power, which one should be moving the market, and sometimes when they should be moving the market, if they're not, that's a big indicator. For example, if we broke below the 200 daily simple moving average, you would have expected the bears to flash crash the market all the way down to like $6,000 because that's such an important level of support that everyone is looking at. But guess what? That didn't happen. The Bitcoin bears apparently are not strong enough to do that. So how are they strong enough to actually push us below this downtrend of support and below the other support we have at 77.50? Now that's a good argument. I don't necessarily think it's a good enough argument to save Bitcoin from a crash, but it is an explanation of why we've been below this moving average for a week and we haven't seen a crash. It's because the bears aren't as strong as they were 2 weeks ago because the bears have already exhausted a lot of the selling pressure that they had. Moving on here, guys, the bulls are also going to point out another thing, and that is where Bitcoin is getting support on the weekly chart. We're getting support on the 100 simple weekly moving average. This is a very important moving average because, as I talked about in yesterday's video, the worst case scenario video, both of these scenarios get determined by what Bitcoin does in relation to this moving average. If Bitcoin falls below this, the worst case scenario that we outlined in yesterday's video, I'll link it right here, that's probably what's going to play out. But if Bitcoin does manage to bounce right here, as it did in the beginning of the last bull market, we saw Bitcoin pulled back down to the 100 simple moving average right here in January of 2016 and bounced and rallied. If we see that happen, then the bull market is likely to resume and Bitcoin's likely to rally to $20,000, probably before the halving in 2020 or around that time. So guys, what I think all of this actually really comes down to is where Bitcoin is in relation to the 2015-16 beginning of the bull market. In the worst case scenario, we're right here and we need to fall all the way back down to the 200 weekly simple moving average, correct, and rally from there. Or in the best case scenario, in fact, Bitcoin has gone through this major rally and is pulling back down to the 100 simple moving average, and then the bull market can ensue. Either one, we're in the worst case scenario right here, or two, we're in our best case scenario right here. And I think it's a really good idea to draw parallels between the previous market cycles and the current market cycles. Guys, markets are indeed cyclical. That's why market cycle is such a big buzzword in this space. These markets repeat themselves. Now, Bitcoin's a pretty young market, but you can look back and you can find trends that show up in literally every single bull market in the history of Bitcoin, going back to when Bitcoin was trading under $100. And the topics we've discussed in today's video and in yesterday's video are founded in those types of market cycles. So guys, tell me in the comments section down below, do you think Bitcoin is sitting right here in about late January, early February of 2016, where we're seeing a pullback down to the 100 weekly and we're going to rally from there? Or do you think the bull market hasn't even really started yet? Because if you look on the daily chart, guys, one thing that always interested me is that Bitcoin got above, let me turn off the 100 weekly simple moving average here for a second. Bitcoin got above the 200 weekly, fell below it, and then rallied. Okay, it did this kind of motion, went whoop, boop, badoop, and then we went on the bull market and we went all the way to $20,000. We didn't just get above it once and then go all the way. We had to fall back below it for a second. But you remember how I've been saying that Bitcoin moves in market cycles and Bitcoin typically repeats its own history. Well, where did Bitcoin fall below the 200 weekly moving average? It didn't do it right here and then get back up above it and have it go like this way and then the bull market starts here. No, guys, in this case, Bitcoin didn't do that. What Bitcoin did is it got above the 200 weekly moving average and now we're coming back down to test it. So does Bitcoin need to come back down to test and fall below the 200 daily moving average and then get back up above it like this to continue on the bull market? That's a question I'm going to throw back to you guys. I want to hear your take on that in the comments section down below. Definitely an interesting concept. I was surprised when Bitcoin broke the 200 weekly and didn't fall back below it back in April and May. I was actually really surprised that Bitcoin did that. We were much more exuberant than I thought we were going to be. And a lot of that had to do with the bullish fundamentals and what we saw happen in 2017. Guys, the Bitcoin bull market in 2017 is history that we didn't have back over here. This beginning of the bull market was not as bullish as this beginning of the bull market, which is bringing about its own consequences for our current market. But anyway, guys, I could ramble about this all day long. I think it's a really interesting concept of trying to figure out what Bitcoin's going to do and looking at scenarios rather than just short-term daily technical analysis. Tell me if you'd like to see more of these scenarios in the future. Remember, guys, what I talked about in this video is not necessarily my opinion. It's really the opinion of the bulls. I'm still feeling relatively bearish on Bitcoin until Bitcoin proves me wrong. Just during the recording of this video, for example, Bitcoin has crashed about $100. Not really crashed, it's fallen about $100 below the 200 hourly moving average, which we had briefly gotten above. I would have liked to see Bitcoin stay above that, but alas, we haven't. We fell from around $8,200 when I started recording this to $8,080. Bitcoin looks like it's going to be moving today, so make sure you're watching your charts like a hawk. But anyway, guys, I've been rambling enough, and this video is already late enough, so we're going to pretty much wrap the video up, but I do want to remind you of the sale running on the Cryptocurrency Technical Analysis Academy. With the coupon code down below, October 2019, you're going to get $40 off at checkout when you come and join us over here at CTA. And I want to tell you guys something. I make these videos because I love making them, but you also have to understand that these videos take a lot of time. I'm talking about dozens of hours a week I put into this. This is basically a full-time job for me. I put a lot of work into this because I'm always studying cryptocurrency, trading. I'm working in these markets all the time, and I'm researching these markets, reading. I do a lot in these markets to make sure that I can present you guys the best content here on YouTube and make sure you guys are getting the most value. And it's not that I don't want to do that for free. I wish I could do it for free, but I simply can't. I have to be able to make it financially viable, and one of the ways that we're able to do that is through the Cryptocurrency Technical Analysis Academy. So for those of you guys who join CT2A, I'm extremely thankful for you guys. I'm thankful for all of you, but especially for those of you who go through CT2A, because you allow for this channel to actually continue, because it can't continue if there's no actual way to fund the channel. There are business expenses that come with a business, and this is, in fact, a business. So guys, that's why I try to humbly remind you that we are running these sales on CT2A, because it allows for me to continue doing what I love, which is talking to you guys every single day and making this a major part of my life. And it hopefully allows for you guys to learn something about the market, like how to read support and resistance, and how to read candlestick charts if you're newer to the space, how to read all these different technical indicators if you're really starting to get into the nitty-gritty of technical analysis, and then the more advanced stuff, like how all of markets and trading in general is about risk and reward, how it's about statistics and probabilities. It's never about certainties. I show you guys how to plan and execute your trades so that you're not wasting your money. It's very important that you understand these concepts. Gut feeling, that's another one. If you guys know anything about artificial intelligence, when you train an artificial intelligence, you give it tens of thousands, tens of millions of data points and tell it whether it's right or wrong, and it uses that data to build an instinct on what it's trying to do, what it was set out to do. It's the same thing with your trading. All of these concepts are ones that you need to know when you're trading, and they're ones that I don't see people talking about on YouTube. I never see anyone talk about gut feeling on YouTube because people brush it away as emotional trading, and that's not what it is. It's instinct. Guys, there's a reason that just about every single animal on this planet besides humans rely and survive on their instinct. It's a very important part of your trading as well as your survival in real life. So guys, if you do enjoy the content here on the channel, you do want to continue to support the channel, and you also want to learn a lot about technical analysis, guys. I mean, this is a lot of content. This is over 10 hours of content packaged into a course for $160 with that coupon code down below. The link is down below. We do have a refund policy. It's a 14-day refund policy, money back guarantee. If you don't enjoy the course, shoot me an email within the first 14 days. I will give you your money back. So that's really a trial period if you like. You can read the terms on that. It's pretty simple. And guys, I'll wrap out with this. I don't want you guys to join the course if you have hesitation. I don't want you guys to join CT2A if you don't think it's the right investment for you. I want you to spend your money in the way that you see fit. So if you are considering joining CT2A before you buy, what I want you to do is join the Discord server down below and go talk to members of CT2A. There are hundreds of our members of CT2A, hundreds of our students in our Discord server down below. You can go and talk to them and see what they think about CT2A. People might comment on it in the comment section down below also. Make sure you have an informed opinion. I can throw up 100 testimonies here on screen, but I really don't want to put all of that editing workload on Taylor, so I'm just going to encourage you to join the Discord server down below. Anyway, guys, that is pretty much going to wrap it up for today's video. I really do want to thank you guys for watching. It really is just, it's a retreat for me when I get to make these videos. I love talking to you guys. That's probably a side effect of me loving talking in general. Anyway, guys, that's going to wrap it up for today's video. Like I said, I do want to thank each and every single last one of you for watching as always, and I will see you guys in the next video. Peace.